All right, let's talk about building wealth. We're going to break down one of the most powerful ways to secure your financial future, investing for retirement. You're going to see how making some smart, consistent choices now can lead to some seriously amazing results down the road.
So, to make this all feel a bit more real, let's follow a story. Meet this couple. They're in their 30s, they bring in a combined $60,000 a year, and they've decided it's time to get serious about building for their future.
So what's their game plan? Well, it's actually pretty straightforward, but it's incredibly powerful. They're going to invest 15% of their income. For them, that comes out to $750 every single month for the next 30 years. That consistency, that's the secret sauce.
Okay, so having a plan is great, but that leads to the million-dollar question. And I mean that literally. Where do you actually put the money? How does that $750 a month transform into a retirement fund that could be worth millions? It all comes down to picking the right investment account.
It turns out our couple has basically three main roads they can go down. And you know what the biggest difference is between them? It all boils down to one thing: taxes. When you pay your taxes has a huge, huge impact on how much money you end up with. First up, you've got the classic, the traditional 401k. Think of this as the "I'll deal with taxes later" approach. The big perk here is you get a tax break right now. The money you put in is pre-tax, which lowers your taxable income for the year. That's a nice win today. The trade-off, of course, is that Uncle Sam will get his cut when you start taking the money out in retirement.
Next, we have the Roth 401k, and this one just flips the script entirely. This is the pay your taxes now plan. You contribute with money you've already paid taxes on, so no immediate break. But here's the absolute magic. Once that money is in, all the growth, all the earnings, everything you take out in retirement is 100% tax-free. And it often comes with a really game-changing perk.
And the third path is the Roth IRA. Now, the I here is super important. It stands for individual. This means you open it up on your own. It's not tied to your job. It has that same incredible tax benefit as the Roth 401k, pay taxes on the money going in, and it grows and comes out completely tax-free later on. Okay, but here is where things get really exciting. Those 401k paths we just talked about, they often come with a hidden superpower. It's called the employer match, and I'm not kidding you, it's the closest thing to free money you will ever find.
All right, let's run the numbers. Let's imagine our couple's employer offers a 3% match on their 401k contributions. How does that free money really change the game over 30 years? Which one of these paths is going to build the most wealth?
And boom, here is the result. This chart lays it all out. Let's start over on the right side. See how the traditional 401k and the Roth IRA both end up at the same total, about $2.1 million? Now, look all the way to the left. The Roth 401k with that employer match, well, it's playing a whole different game. Let's really dig into that final number, because it is huge. After 30 years, and this is after all the taxes are paid, the Roth 401k with the employer match leaves our couple with a net worth of over $2.4 million. That is a massive difference. Why? It's simple. They took advantage of the employer match. That is the incredible power of free money. So, that $2.4 million is an incredible goal. But how does your money actually grow like that? Let's pop the hood and look inside these accounts. When you put your $750 in each month, what are you actually buying? Well, for most of us, the answer is something called a mutual fund. I love the carpool analogy for this. You and thousands of other people all chip in your money, and then a professional manager invests that big pool of cash for you across a whole bunch of different stocks and bonds. It's a super simple way to get in the game. And what this does is it gives you a huge advantage right out of the gate: diversification. You've heard the saying, right? Don't put all your eggs in one basket. This is literally that, in action. You own tiny little pieces of lots of different companies. So if one of them has a bad year, it doesn't take your whole portfolio down with it. It's like a built-in safety net. Now, the real engine driving all this incredible growth is a little thing called compounding. It's where your money starts making its own money, and then that money starts making money. It's a snowball effect. And the coolest part is, you don't have to just imagine it. You can actually see it for yourself. Seriously. Just go online and search for an investment calculator. They are amazing tools. You can plug in your own numbers, what you're starting with, how much you can put in each month, and it'll draw you a chart showing your potential growth over decades. It takes this big, abstract idea of retirement and makes it feel totally real and totally achievable. All right,
So you get the concepts, you've seen what's possible, now for the most important part. How do you actually get started? What's the first real step?
Well, if you're going with an IRA or you just want to invest on your own outside of your job's plan, you're going to need what's called a brokerage account. Don't let the name scare you. It's just a fancy term for an account that lets you buy and sell your investments. And believe me, opening one of these is incredibly simple these days. You can go online to any of the big, trusted firms, like Vanguard, Fidelity, or Charles Schwab, just to name a few, and you can literally be set up and ready to go in a matter of minutes. This is the first real step on your journey to putting your money to work.
So when you boil it all down, the path is actually pretty clear, isn't it? Choose the right account and never, ever walk away from free money if your employer offers a match. Then invest consistently and just let time and compounding do all the heavy lifting for you. The single most important thing is just to get started. So the only question left is, what's your first move going to be?